Hello, everybody. Welcome back to Salsa Tequila TV podcast. Today we have Loomdart, the crypto OG. He's been in crypto since 2014, have built companies, and also a part-time boxer at Crypto Fight Night. So without further ado, welcome Loomdart. How are you?
Hello, Salsa. It's an absolute pleasure to be here, sir. Honestly, whenever people ask me what I do, it's like there's so much to say. I just give up and say yeah, I'm a crypto boxer. Which they just look at me and then leave, and it makes life a lot easier.
Yes, the good times. So can you give a brief intro as to how you got into crypto? Because I'm super curious about this. I don't think I've heard it anywhere.
It's an interesting story in of itself. I come from a very, very tiny town with not much going on. And so I was always a hyper online kid. And then in 2014, I found out about Dogecoin just through their, they sponsored a Jamaican bobsled team, and it was on Reddit everywhere. And so just found that, and then bought a bit of Dogecoin and found out that crypto IRC chats existed. And effectively what really got me into crypto was the fact that I could chat in these IRC chats with just a bunch of people much older than me. I could just troll them. I was a complete reply guy troll, just annoying everyone in these chats, but they couldn't really kick me. So yeah, just always chatting with crypto people, and then slowly just got more and more into the space because there just really wasn't much else to do. And then kind of initially for me it was just always a fun thing, but then I was always interested in technology, and I was hey, this thing is so uniquely different to everything else that let me get a bit more involved. And then to cut a very, very long story short, here I am.
So I wanted to touch on GBTC and MicroStrategy because you had some interesting takes on Twitter that I want to dive into it and understand for myself and for the listeners. So for the listeners unaware, before converting into a BTC ETF, GBTC was a Bitcoin trust aiming to provide Bitcoin exposure in a more traditional way to investors, but it had some interesting mechanics. But the first thing to explain would be what exactly GBTC was before the ETFs came.
Back in 2014, 2015, 2016, if you had money in the TradFi system and you wanted exposure to Bitcoin, there was no real way to get exposure. There was no ETFs. There wasn't really anything apart from GBTC. And what GBTC was a fund that just happens to own 100% Bitcoin. And so effectively was a quasi ETF in a sense.
I had this analogy in my mind that GBTC was kind of like when you buy a coin and you stake it, so you lock it for a period of time to reap a premium or reap a staking yield. I had this idea of the premium trade in my mind, but I know it's not correct. So I wanted to ask you what was that premium trade, because I think they have pretty significant premiums, especially through 2021. I remember 25%. Can you touch on that?
Yes. So this is the biggest part of GBTC. It's what made it so incredibly exciting and interesting to the crypto side of investors who, had Bitcoin. And it's also what eventually caused it to blow up. But effectively, you couldn't really exit this thing. And whenever crypto was really, really hot, it traded at a crazy premium because there was just so much demand for Bitcoin. And, there just wasn't that many outlets available for GBTC. The only way to generate more GBTC is by putting Bitcoin into the fund. You sending them Bitcoin would get you locked GBTC. It was locked for 6 months before you could effectively reap that premium. For this discussion, I think we can effectively ignore anything around GBTC pre-2020 because it did trade at a high premium and then a bit of a discount and a really high premium again. But it wasn't a big thing. It wasn't a big vehicle. It wasn't this big entity that it became. The part that I'd say really, really is relevant and honestly grew the crypto space, but then completely imploded the crypto space is the period from late 2020 to probably mid 2022. And so was for a bit of context, effectively what you could do in late 2020 when Bitcoin was starting to break up, it was at 18, 19K, is GBTC then was trading at the equivalent of Bitcoin, I think 30K. So effectively, if you put Bitcoin into GBTC, you turn an asset that's worth 19K into an asset that's worth 30K. And obviously that sounds freaking amazing, right? And that especially sounds amazing if you're a US fund that really wants to report some good end of year numbers, because you're getting a free 50% upside. And so what happened is in late 2020, a bunch of these funds were just aping Bitcoin purely to put it into GBTC, but with the idea of, hey, I want to do this so I can mark my books up, and then end of year you have really good numbers, and you use those really, really good numbers to raise like a fuck ton more money. And this is the really important part here to remember, these guys weren't interested in Bitcoin. They were purely using this as a vehicle to mark their books up and just raise more money effectively. So to them, it was purely just like a trade. And so this was honestly interesting in that you can see this huge price pump in the chart from like December onwards, where, Bitcoin just starts going vertically up. And now this is a lot of speculation from my end. And I'm sure, this crypto is really, really cool. And a lot of people wanted exposure. So there was many, many reasons for the price to go up. But I think this probably contributed like a decent sum to that huge rally we had in like late December, early January 2021.
Yeah, I remember you mentioning that.
Yeah. And so I mentioned that part because January, February, March, the premium started to crumble a bit. But effectively, what then happened is a bunch of crypto people realized, like, hey, crypto's exploding. There's this huge mass retail audience coming. Everything's going up. But I have a Bitcoin that's worth EK and I can turn it into EK by just putting it into GBTC. So just after these TradFi guys pummeled a bunch of Bitcoin into GBTC, the crypto firms started doing it. And I'd say what really moved the needle and made it like kind of turned it from a good thing to a bad thing is BlockFi were like effectively. So for anyone that doesn't know what BlockFi was like a Bitcoin yield company. The whole pitch there is, hey, give us your Bitcoin and we generate yield for that Bitcoin. The piece people kind of knew but seemed to ignore is that like their main way of generating that yield was purely the GBTC trade, which is, okay, we're going to take all this Bitcoin and we're going to put it into this vehicle that is obviously worth more as a premium. And then, say, hey guys, we're generating 10, 15% yield for our holders and use those numbers to raise a bunch of money.
Just to cut you off here, the trade only worked, from my understanding, when people actually deposited Bitcoin into GBTC, because the Bitcoin they deposit basically reaps the premium after, and they can unlock it after, let's say, 6 months or 1 year, depending on the duration of the lockup.
Yeah. So for 2020, 2021, it was 6 months. And effectively, it's like I put in a Bitcoin worth 20K. The premium's currently at 50%. I can say this Bitcoin is now worth EK. Just there's this minor caveat that it unlocks in 6 months. And so effectively, throughout like early 2021, lots of companies, a lot of crypto people were making this trade. It's why it's called like the GBTC trade. It's funnily enough, effectively, it was seen as like free money. But the big problem, and I think the reason we really crashed and collapsed in May, is that obviously the premium is reliant on there being more demand than supply. People don't really talk too much about this, but like late 2021, the tech for more and more people to buy Bitcoin got significantly better. There was significantly more on-ramps, and GBTC wasn't as demanded or as exciting a vehicle as it was in, like 2018, 2019. And so the demand for this thing was drying up. And so that premium pre-2020, it hit like 120%, but this time it peaked out at like 60%. But it slowly started to drop. And then effectively leading into May 2021, the premium was like, it was effectively non-existent and even slightly negative. And so in April 2021, I was like, hey, so we know for a fact, because you can check Grayscale's website and they show you like, hey, this much GBTC is unlocking, this much is unlocking at certain dates. And it was like, okay, there's a metric ton of GBTC that's unlocking in May, and there wasn't a premium. And so effectively, there was a bunch of people that had pummeled money into GBTC purely to reap that premium. But, they don't really care about Bitcoin or anything. And then behind them is a bunch of crypto people who effectively did the same thing. And so in April, I was like, okay, this kind of seems pretty bad. because a lot of the people with money in this are just going to sell the second it unlocks because they never really cared for it. And so much of the crypto infrastructure is reliant on this thing staying at a premium. Like, BlockFi has over, don't quote me on this, but I was pretty sure at least over $1 billion of client funds that's generating quote unquote yield, but there is no yield. The premium's gone, and they'd have to sell their GBTC to lock that premium in, and their GBTC hadn't even unlocked yet. And I actually spoke to a few fund managers about this because this seems pretty bad. And the response I got was like, oh, it's fine, don't worry about it. And for a while, I thought like, these guys clearly just don't see it. But after talking to a few of them, like over the years, like, damn, it was like a big implosion. What happened? Like, why didn't you guys look into it or whatever? I realized that everyone knew, but it wasn't something they could hedge. Like, all their money was tied up in the trades, and there was no way of farming that premium except for selling GBTC, and they didn't have any GBTC to sell. So I think all the crypto guys had this silent understanding of like, all right, guys, we're all in a pretty bad situation if this thing collapses. But as long as none of us, we will commit to not selling, then, it'll be fine. Like, it'll go to like a small premium and we can all slowly unwind. But remember the US fund guys that got in November, December, because obviously 6 months after November is May. And that's when the US guys' funds unlocked. And they didn't care about crypto. They were purely just here to farm that premium on their paper books and water market. And so they just sold. And they sold pretty aggressively, pretty violently. That's honestly what I think led to the May collapse, is suddenly these guys started selling because, they didn't really care. Even though it isn't exactly an arb trade because, you can't exit GBTC into Bitcoin if there isn't an ETF. And the ETF only came in like years afterwards. The only thing like keeping GBTC up was a few traders who were like, oh, this thing's a Bitcoin, but it's trading at like 10% discount.
So that's how it went into discount from the premium. So on the way up, the premium meant that people want to buy BTC, put it into GBTC to collect it later when it unlocks. But then when they start unlocking, from what I understand, they start winding down aggressively, and then the premium goes away. It becomes a discount. And then those people with Bitcoin stock are actually at a loss.
Yes, exactly. And so effectively just you're left with all the TradFi guys collected their dollars, they left, and you have a bunch of crypto entities who were effectively underwater on this thing. I got a lot of this right, but one of the things I definitely got wrong was I kind of thought that would be it for the GBTC pain, which funnily enough was very, very wrong, because I'd say the like actual GBTC collapse happened in 2022. Like 2021 is when the crack started and funds started to get insolvent, but they managed to hide the losses and they managed to, bite the bullet effectively. But that's because there was still a lot of profits going around. 2021, we had that huge November pump back upwards, and that like saved a bunch of these people. But they kind of still held on to their GBTC with the belief of like, hey, this thing's eventually going to be an ETF and we can just get that discount as profit,
so
and
that
it'll
was
go
the
back to
ultimate
normal
bailout for those who get trapped into the GBTC trade underwater.
It was advertised as being the ultimate bailout, and it's what kept people in the trade even though it was decently underwater. Now, the part that really, really blew up the industry was obviously 2022 did not go well. It was a fairly aggressive Bitcoin bear market. And the thing with liquidations in crypto is that in TradFi, nobody likes liquidating in TradFi. It's really, really bad for business. So the way they work in crypto is, you have 10 grand on the exchange. If your margin requirement goes above that, they just take all your money and close your positions, because if it keeps going above that, then you owe them money and there's no way for them to collect that money. In the TradFi system, it's very different. It's why there's so many bailouts and all of that, is because everything in TradFi is so interconnected where, if one company goes under and they don't liquidate it in a very healthy, safe way, it could cause a bunch of other companies to go under. But that's not how it works in crypto. And in crypto, liquidations are just the second you hit that margin level, they just fire sell your assets. And so all of these crypto firms that were effectively hiding losses in GBTC started hitting their liquidation levels on their assets. And, in those cases, it's not about, I can make some money here or make some money here and cover it all up. It was, all right, we need to fix this. We need to sell something. We need to cover these losses. And just a lot of that selling kind of occurred on GBTC. And obviously, GBTC, the only thing that really makes it go up is these retail guys who are like, hey, I want exposure to Bitcoin, but I can't figure out a way to actually buy Bitcoin. And no one really wanted to buy it in 2022, which is why the discount went so crazy low. Because you effectively had all of these firms being forced sellers and just zero buyers. And so as it went lower and lower, more and more people got liquidated because a lot of them used it as collateral and such. And so, just effectively, long story short, people put money into GBTC when it was a premium. The money came out when it was at a discount and they were like, fuck. And then we had a huge crypto industry born because of the fact that this thing was at a premium and they could get easy yield for it. And then that industry imploded because obviously it wasn't easy yield. And then in 2022, everybody got liquidated. And because everybody got liquidated, they had to sell their GBTC. And so it went to a ridiculous, I think at its peak, at its trough, the discount was 70, 80%.
Actually, from talking to you for the first time, I think I get the grasp of it. So essentially, people bought at the premium so that they can mark their book higher when they're funds or there's crypto participants and projects that thought they can buy BTC and reap the premium after the unlock. But there was not enough liquidity. And when people started selling, the premium became a discount. People got trapped. Then there was the talk about converting to an ETF that could bail out people underwater and maybe make a trade for people to speculate to the upside. So I think I understand better the grayscale situation thanks to you.
I mean, obviously this is all horrifying. A lot of people lost a metric shitload of money. But that concept around GBTC is going to convert to an ETF soon, it's fine. But effectively, a lot of people were buying GBTC at a 30% discount, at a 40% discount. A lot of people being the guys that already owned a bunch of it, because to them it was, hey, not only do I get discounted Bitcoin, but I also can support my existing bag of discounted Bitcoin. And they kind of over leveraged into this thing. And then, it just collapsed because, the ETF did not come in 2022.
People doubt the trade and they exit too early.
Yeah, and it was purely a sell thing. Some people bought at a 40% discount and then it went to 50% and they were like, I have to cut my losses here. So effectively, it was just this outside avalanche, honestly. And it's also really good to understand this part because I think a lot of people don't understand how structurally anomalous 2022 was. The amount of sell pressure on Bitcoin from every single angle was ridiculous. The concept of, it's just another bear market, I don't think was fully valid here because we had such a ridiculous structural amount of Bitcoin selling. Maybe it will come in another style or another way because markets never repeat, but they always rhyme. But it was unique in that sense.
Yep, it was a terrible year. Not just GBTC, also FTX and everything else.
Yeah, it was not fun. But it's why I think it's good for me to come on here and jam with you and explain what the GBTC premium is, because the only thing GBTC shares with MicroStrategy is the fact that both of these terms are called premium. That's it. Anyone trying to compare the two is bonkers.
Yeah, you've been very vocal about that. And that's why I wanted to talk about GBTC, because for one, I want to understand it more and probably my audience as well. And for two, it's very important in order to understand your thoughts on GBTC and MicroStrategy analogy, which I think you've been extremely vocal on Twitter. So I pulled out this tweet from Twitter, which was on November 26th. LOL, man, they're comparing MicroStrategy to GBTC. When will this GBTC stuff leave? It's a nightmare. I can't wake up from. And then you're ranting about it. So I wanted to touch on that because I think with the intro that you just mentioned, I understand better why it's not a good analogy for MicroStrategy. But I will let you elaborate as to why you think the comparison between MicroStrategy and GBTC is ridiculous.
I want to preface all of this with I am not a financial advisor. Nothing I say constitutes financial advice. I'm a dark platypus penguin hybrid called a Wassie on the internet. I want to give a bit of history as well to the MicroStrategy stuff, because it's like this super funny phenomenon where there's like two sides to the discussion. One side is like, you know, hyper Bitcoin maximalists, the reserve currency of the world, it's coming, it's going to go to infinity. And then the other side is people that really, really understand options, and the guys, you know, who's selling options is like their day job. And it's very funny because generally most guys who survive and thrive in the options market are people who are very, very delta neutral. And so these people generally also, just from talking to a few of them over the years, I've come to realize that to survive in a delta neutral market in options, you have to be fairly cynical. So they all just think that everything is a scam that's going to zero. The stock market's going to zero. Bitcoin's going to zero. They're purely just here to buy and sell options so they can farm gamma, and like, so they can effectively farm like specific options things.
For those who don't understand, farming gamma is basically farming volatility, from my understanding. So you're delta neutral, meaning you're not impacted by price going up or down. You're impacted by upcoming volatility, so the price moving a lot.
Yes, but effectively it's like you're long or short of volatility. So for futures, you know, you buy and the price goes up. It can go up at any time, that's fine, you make money. With options, you're buying, but the price has to go up before a certain time for you to make money. Just think of it as trading futures, except instead of just trading price, you're also trading the time of that price. So for some backstory, MicroStrategy is a company that currently owns Bitcoin. Now, the market value of its Bitcoin is less than the total market cap of the company. The difference between the total market cap of the company and the total market cap of all of their assets, I say all of their assets, but I'll say Bitcoin in the future because all of their assets are like 99% Bitcoin. That's called the MicroStrategy premium. So if they have $100 billion in Bitcoin and their market cap is $200 billion, that premium is 100%. And especially over the past few weeks, Michael Saylor has been issuing corporate bonds to buy Bitcoin with. And a corporate bond is, hey guys, give us money. We will usually pay you an interest rate, but Saylor's been able to sell these corporate bonds at a 0% interest rate, which is really good and makes this a lot simpler. You guys give us money. We will use that money to buy Bitcoin with. And then when your bond matures, we will give you back equity that's the same amount as the bond's value they put in at the start. So if you buy a $500 billion corporate bond and hold it to maturity, it translates into MicroStrategy equity. They also are issuing the equivalent amount in debt, which is, all right, I'm going to give you guys $500 million. In 5 years' time, pay me back $500 million. Now, I'm going to focus on most of this for the equity side and assume that like all of this is being done via equity. I'll touch on the debt part later, but the debt part is not relevant for the next few years because the bonds are still yet to mature for like a long, long while.
Yeah, that's a concern that I read so many times. People are worried that, let's say, Bitcoin drops and MicroStrategy has to refund the debt. Maybe we can touch on that later.
Yeah, that's definitely a concern, but that's something we should address near the end. Because the interesting part, and I think the big question a lot of people have is, why would I give these guys $500 million to buy the right to own $500 million of MicroStrategy equity in 5 years, like a 0% interest rate? Right? It sounds fairly crazy from the surface. And the real reason there is so much demand for these multi-billion-dollar MicroStrategy bonds, this isn't entirely true, but I'll touch on this afterwards. But like, let's assume it for simplicity's sake, is these people aren't really interested in MicroStrategy. They're not really interested in Bitcoin. What they're looking for is to farm gamma. So this corporate bond is effectively just a call option, right? It's like, hey, you have the right to own this amount of equity at this point in time. And the fact that it's a call option means that, you know, it has gamma. And generally, whenever there's volatility in a market, in an instrument, you know, volatility just means, you know, it's just going up and down a lot. The value of all the options go up because effectively it's assumed that there's more risk, so it's more expensive to hedge your risk because the thing's moving so much. But yes, so the majority of the people buying MicroStrategy corporate bonds are buying because you're effectively getting a free call option on an asset that's just very, very volatile. Like they're getting the gamma part of the trade for free. And so what they're doing there is they will buy the corporate bond and then short the stock on the just general stock market. They're trading it so, if it goes up, their position is worth more money because it's more volatile and they're hedged because they sold the stocks. If it goes down, their position is worth more money because they're hedged and it's moving a lot. And so, they're making money. The only bad part for them is if it just doesn't move, because options in a market that's not volatile at all, that has very little gamma, are just worth less because the thing's not moving much. No one really wants to hedge risk or such, and it's just not that exciting. So in short, what these corporate bonds guys are doing is, hey, this thing is incredibly volatile. We want to farm that volatility. And so we can buy these corporate bonds and then just hedge and effectively get quote unquote free money on the bonds. And so that's why people are buying the corporate bonds. And I think that's something that like a lot of people have missed. It's convertible because it can convert into equity.
So they would buy the convertible bond and then they will short the stock and collect on the volatility. I'm not sure I fully understand that part, because if you buy the convertible bond, what does it represent exactly? Does it represent future equity, or you have an option?
I mean, there's obviously risk involved with the convertible bonds, but it's not as dangerous as people think for a few reasons. First off is, Saylor himself has said this, they're relatively hedged because they're shorting on the stock market. They're borrowing stock to short it, which hedges their downside a decent chunk. Also, the convertible bond buyers have seniority to the equity owners in terms of assets. So they're still unsecured, but if everything goes tits up, anyone that owns a convertible bond has seniority over anyone that owns MicroStrategy equity. So the Bitcoin that their money bought goes to them. And finally, there's also the equity proportion at the end where, if it all goes tits up, you still get this chunk of MicroStrategy equity. So that's not like, it's perfectly safe to do this, but it would require a pretty aggressive disaster scenario to occur for something dramatically wrong to happen here.
So when you say convertible bond, convertible into MicroStrategy equity, is that correct?
Yes.
And is that at like you buy it at a discount compared to, let's say, the stock
no
trading
discount.
at a premium?
So they're fine buying this bond of the asset at the current market value, even though so I shouldn't say it unlocks in 5 years, because that's not correct. Like, it's effectively a call option for that amount of equity in 5 years. So you can, it's not like GBTC where this stuff is locked. These things are far more liquid and like actually trade and such. But effectively, these guys are buying the bonds, hedging the stock. Just think of it as they bought the bonds, they sold the stock, and so they're farming the volatility, which is the gamma. So as long as MicroStrategy stays volatile, they're making money, and there's going to be more and more appetite for the convertible bonds, which is what Saylor means when he says, like, hey guys, I'm selling volatility.
So just to touch on the MicroStrategy options play, people are buying the convertible bonds and then they are shorting the stock to be delta neutral. And from that trade, they make money with options farming, what's called gamma, which is basically volatility regardless of the direction.
Yes. So I think for the purposes of this podcast and like the kind of general trader who hasn't looked too much into options to understand, but effectively all people need to know is that the reason these guys are buying the convertible bonds is because they get to farm the gamma, and the gamma is just, volatility, which makes the money. All you need to know is they have this huge appetite for the bonds because it means they can farm money through the gamma. Now, there is an entirely other type of convertible bond buyer, and that is people who already have a large position in MicroStrategy, where they're kind of treating this as like, hey, I have so much of this company and so much of my balance sheet, I can help support it by buying these convertible bonds and effectively doubling down on my bet while letting this company, use my money to buy more Bitcoin because they already have so much MicroStrategy. And it's kind of a bit more than like venture investor doubling down on like a fund they invested in, because it's not just they're buying equity, but the money they're putting in for that equity is being used to grow stuff.
Yeah, a lot of the speculation also that people had was if MicroStrategy comes crashing, Saylor will be forced to sell, and they call it a black swan, although they're basically trying to predict it, which makes little sense. Maybe we can touch on that a little, but let's say MicroStrategy drops and the premium doesn't exist anymore. What do you think will happen? Do you think he's going to have some forced selling to do, or do you think he's going to be totally fine like we've seen in
Oh,
2022 when
that's a
market?
very good question. So, and this is with the assumption that the majority of the buyers of the convertible bonds are people looking to farm the gamma. And it's not so much if MicroStrategy goes down or goes up, but more if the volatility of MicroStrategy stock decreases, there's less of an appetite for people to buy these convertible bonds, which means there's less of a chance of Saylor being able to raise more funds to buy more Bitcoin with. And now that's the big bet Saylor is making, is that MicroStrategy will remain volatile long enough for him to raise enough money to buy enough Bitcoin to have the price go up enough to where the value of the Bitcoin MicroStrategy owns and its share price are fairly similar. And so when that happens, it's, effectively, there's not really any big risks there because they just become like a Bitcoin holding vehicle. And so he then has 2 or 3 years to make sure that they're in like a pretty decent position. And, when the debt, which like when that comes, they can manage that properly. And just, if you have $400 billion of Bitcoin and you owe $10 billion, I think he'll be able to just either issue more equity for cash and then use that cash to pay off the debt. And like, I honestly really doubt it would get to a case where he would be selling Bitcoin to pay off the debt, because that would imply he couldn't sell more equity. And then in that case, it would have, like a pretty aggressive price drop would have had to happen. Like, I
Mhm.
think that's the slight bear case from Saylor's standpoint is if stuff stops getting so volatile, he won't be able to sell all of these convertible bonds. And then probably the MicroStrategy share price, I mean, the premium isn't too crazy right now, but that would probably drop to like par or equal. But yeah, in terms of a giant, huge bear collapse and MicroStrategy being a Ponzi scheme or whatever, I think crypto people are so hurt by how insane 2022 was and the fact that it was just insanely cataclysmic. They kind of think that like everything has to behave like that. But MicroStrategy kind of really isn't the case there. Most of the money they've raised so far has been through the issuance of equity, and they don't owe an insane amount of money yet for a few years. I mean, his bet needs to be short term because that's what's going to keep volatility up and that's what's going to get people interested in the bonds.
Not a problem for now. It's a problem for 2, 3 years, like you say. If volatility dries out and price goes down and he's underwater on his Bitcoin back, then he has to deal with the debt essentially.
Yeah. But I mean, it is just a very, very interesting, like, trade. Like, good. And I think the most important part of like this podcast that people should take home is that premium. It isn't bad if it goes to zero. Taylor's big bet is that it does go to zero, but it goes to zero in a way that's positive, where, they have $300 billion of Bitcoin and their market cap is $300 billion. And so, like, that's what his big play is.
Yep, he seems a lot more sophisticated than all the leverage degens on Twitter who use Bybit, Binance, OKX to long. He's not going to get forced out that easily. It would take many years and he would have to be in debt for equity. Most of his convertible bonds are at 0% recently, from what I get.
Yeah. But gosh, I mean, also everything aside as well, we've had so many crazy Bitcoin maximalists over the years who have just been overly hyper aggressive. And it is kind of nice. Like, obviously, Saylor's a very, very big proponent of Bitcoin. He just seems much more reasonable about it, much more professional. The famous maximalists we've had of the past were like just so much more crazy. Whereas Saylor's just like, yeah, guys, buy as much Bitcoin as you can. Like,
And
that's
he's
it. Like,
trying
I
to
think
get
it's
other
going to go up.
companies to do the same.
Yes. No, I mean, I think they will always be the most premier company for this whole concept that he created because generally the larger the vehicle, the look, if you're buying into a company that's doing this, they have more money, they have more credit, they're more of the biggest player here. So it's just better off going with MicroStrategy than like any of the other players really. 'Cause from his eyes, it's like the more people that do this, just the more fixed income markets money comes into the crypto space.
And buy the best asset in the world.
How many chairs are you sitting on,
How
sir?
many chairs are you sitting on exactly?
God, he's so good.
All right, seems to me like Michael Saylor truly believes that BTC is just better money and going to be flipping some world currencies, and that's his big bet entirely. Basically, it will work out very well if BTC gets a lot more adoption, if countries start buying it. He's one of the biggest buyer along with the US ETF, but maybe there's more buy pressures that come in. We see it from small countries starting to make strategic reserves. So it seems to me like his big bet is that we're still very early in BTC, and if he's correct and BTC goes up a lot, his balance sheet goes up, he can grow his BTC stack, which he's basically one of the biggest holders in the world, and everything should go well for him and his company. On the other flip side of things is where it gets a bit tricky because people are not necessarily sure, like can he hold forever? How long would it take? If the price of BTC does go down, since there's very, very low to no interest on those loans, he's not going to be forced selling. And we've seen that in 2022 with the FTX collapse and the price of BTC collapse. He hasn't sold a single Bitcoin. He's actually one of the only guys who held through the bear market fully.
Yeah, I think it's very, very clear that his big bet is that Bitcoin just goes up a bunch. And actually, like, God, this used to drive me up a wall like a few years ago where people would be like, why isn't he timing his buys? Why isn't he like buying the dips? Why isn't he, why isn't he being quote unquote smarter about this? And it's like, guys, like
he doesn't have the pretense to time the market. He just thinks we're so early that it doesn't matter.
He's like, I think this thing is going to infinity. I want to own as much of it as possible when I can, so I will just keep buying. It's just, I don't know. I think people try and act smarter or like cooler than they are or whatever. And it's like, if Saylor was, if he was like selling here, buying here, he'd be making so much more. Like, that's not what he's interested in.
So let's run to the next segment. So first of all, I wanted to touch on your businesses while navigating the crypto market. You've been a serial entrepreneur. You have two companies that you're active on that I see recently are ByWassies and at LoomLock on Twitter. Can you explain what those companies are and what's the projects that are ongoing this season?
So LoomLock is the kind of core of everything we're doing. And the way we treat it is we treat ByWassies as, all right, this is a way for us to build out tooling, get community engagement, community interactions, and kind of keep people occupied till the LoomLocks are like ready to ship. And I know it's been a very long time, but no one's more kind of upset about it than me. But it's just, we haven't been idle-handed during that long time. And like, I can assure you, so there's 3 separate like teams now within the organization, and it's almost, actually no, I think it's over 40 people now working on all of this stuff. And so the LoomLock, and I say it's a tool because ultimately it's up to you how you use it, but the LoomLock is our interpretation of like, hey, maybe you need a bit of help in making sure that you don't check your phone at night when you're trying to go to bed, or you leave your cookies for like when you want to eat them, and it just lets you effectively offload that big chunk of willpower that it takes to resist these things into the device itself. And like, you just lock up your phone before you're going to sleep. It's a very simple concept, but I personally have used the competitors for very, very many years and realized that like this can be done in a much better way. So we've built a gigantic ecosystem around it, and that's partially why it's taken so long. But I am very, very sure that when we do finally launch, which should, well, we're actually slightly live now on a few things which you can access by going to loomlock.com. But when we like fully launch, I think we're gonna blow a few minds. And on the ByWassies side, it's basically just an entirely, we're just trying to find as many new, different, cool things to help grow the crypto audience, help onboard people. And I have it's a gigantic 21-page, like, huge update of what the team's been doing over the year, because ever since we got the majority of our money back from the FTX collapse in July, it's just, the entire team has been like fully just goblin mode working, and like we're starting to surface now, and there's like so much to say that I thought, I'd have like a big doc to kickstart everything off, and that should be ready in like a few days and will be launched just on my Twitter account, twitter.com/Loomdart.
Great.
Yeah.
So we'll keep an eye on the ByWassies side. And for the LoomLock, I'm quite excited. I know willpower is such an undervalued thing, because it's just like the food, right? If you buy the fast food, you have it on the counter, at some point you'll be tempted and probably succumb to it. For those wondering, the cute avatars we have on the screen right now was made by Loomdart's team. Check it out. I like that project a lot, and we'll keep an eye personally. Let's move on to the next market segments. Things are moving fast. There's high volatility with the MicroStrategy buying spree and the elections and everything going on. Price has went up a lot. I was wondering your thoughts on the market a little bit. So let's say with Bitcoin price, since the elections, hitting price discovery, where do you think in the cycle we currently are?
I think, honestly, like from a purely chartist perspective, it's like we have the 100k level. It's a very clear psychological resistance level, and people always joke about this, it's like, well, if it goes up, it went up, so it's bullish. But like, I think that k is like the key price point, and so it may, in my eyes, be worth being like, look, if it gets over 100, it's probably got room for many more legs. And the way I trade is I only take like the hyper obvious trades. Like, I think low 50Ks was just an incredibly layup trade, because, this thing was down 30-40% and the ETF buyers were just happily buying more and more Bitcoin. It was honestly super cool to see. But I'd say 100K on the Bitcoin side is like the level to be aware of, to be cognizant of. God, the market's like matured so much. It's crazy. It's become so much more than it was back in like 2018, 2019, where all you needed to trade was just a BitMEX open interest and the funding rate. But I think on the Bitcoin side, I think 50K to here was a really good trade, and just, kind of one of those places where it may be better off waiting to see how it does. Okay. What about yourself, Mr. Pepper?
Yeah, I think 100K is a big psychological level in terms of just cycle. If you compare to the past cycles, I think probably quite early, in the sense that it never really happened that we get a true all-time high breakout with some follow-up of 10-20%. That doesn't really look back, and it just stops after 1 month. Typically, it takes a few months. So I tend to think that the cycle is not over yet.
God, I honestly, I don't really like the concept of cycles anymore. Like, I am actually a big proponent of the super cycle. But to me, the super cycle just means, we have the same inflows that have kept the SPX going upwards for the last 30 years, which is just, American mum and dads who are like, let me put a bit of my salary into this or a bit of it into this. And that actually started in 2021.
Yep.
But obviously, we had a brief period of hyper fraud in 2022 that kind of collapsed it a chunk. But I think generally, we're just like the SPX now. Like, it's just generally going to trend up, and that's kind of what the super cycle is.
The dips get shallower as well. 2017, the market cap was so low, and there was none of those traditional correlations, and the dips were like 40% so many times all the way up. 2021, you never seen such dips. You've seen maybe 10-20%. So I'm curious to see how deep the dips are on the way up. I definitely hope for a super cycle, man.
These are new times and interesting times for the market. I think honestly, that's why we chopped around 70K so much, was that a lot of cyclical traders and a lot of the old money was like, hey, this is a decent time to sell free, this thing's just that it's prior all-time high. Let me take some profit off the table, this, that. And that's kind of why we stalled out at 70 for so long, is just a lot of money was changing hands. A lot of people who didn't really think that the ETF was legitimate, it was going to keep having inflow, was selling. And then people were buying, being the ETF is doing well. And so it's, I don't know, I feel like the soul of the market has shifted somewhat.
Yeah, I feel that too. The things that work past cycles don't necessarily appear to work the same way now. Founding rates, especially, it's getting arbed heavily. The liquidity is just a lot bigger. You can't look at the order books the same way. I agree with you. It's matured. I wanted to touch also on Ethereum. I'm unfortunately a big bag holder for the past few years, and I have some memories of past cycles. I must ask, do you think ETH will hit all-time highs this cycle? And are you a fan of ETH or not anymore?
I think the concept of the EVM and the way it can be used for like an array of different things is super freaking cool. And this will make a lot more sense when we announce one of the big things we've been working on over the past few months, which is something that you can do on ETH that you just can't do on any other network. And it's because of the beauty of the EVM. I think ETH had a period in, I think about a year ago, actually not a year ago, maybe 5-6 months ago, to really outperform, and it just kind of didn't. And it was like after that, it seemed fairly clear that, like, all right, this thing is going to wash people out for a while. But generally, I'd say I'm pretty optimistic on ETH, and I hope, we can be a decent part of the optimism when we launch this thing. Like, it's just it's a separate narrative to Bitcoin in a sense. And I think that Bitcoin's been taking a lot of the limelight purely, not so much because of ETH weakness, but just Bitcoin's been so strong. I think in the long run, yes, it will break all-time high. I do think it will become a bit more apparent over the coming weeks because, now that like the kind of 2017-esque Dino coins have hyper pumped, I think the market's reaching a point where it's like decision time. And so honestly, just let the next few weeks kind of show us a story and then just ride the trend. In terms of overall crypto adoption and all of that, though, I think the next few months are going to be really, really good, especially as we've seen of like, you basically couldn't launch a legitimate crypto project because if you tried, there was multiple government agencies that were like hell-bent on making sure you didn't. And that's kind of being exposed now and really, really is encouraging because it means that finally we can have good crypto shine is what I would say.
We've seen the Coinbase and other companies go on, I think, Joe Rogan podcast exposing how they were debanked and they were basically killed in their ideas before execution. And now it's changing with the change in administration. So I agree with you. The next few weeks and months will be very interesting. I'm looking forward to that as well. Thank you so much, Loom. It was a pleasure. Please go and follow Loomdart on X and his associated project, ByWassies and LoomLock.
It's been a pleasure, sir. Thanks for having me.
Hope you've enjoyed the podcast. Don't forget to follow, and we will see you next week.